So I'm here with Patrick CHEUNG, a founding partner of ZWC Partners. Welcome, Patrick. I wonder if you could please just give us an intro to ZWC for those of us that aren't as familiar with you.
Thank you for having me today. Actually, ZWC Partners, is an Asia-based private equity firm. We have the office in Hong Kong, Shanghai, Singapore, Jakarta, and Tokyo. Actually, we have already opened our European office in Paris since last year. We are currently manage over $3 billion assets with over 70 portfolio companies in Asia. We have 40 portfolio companies in China, and also we have more than 10 companies in South Asia. We also have five companies in long China and long South Asia, like Korea and other regions in Asia. Actually, we have total nearly 40 investment professionals, across Asia, the regions. Our main investment strategy is a growth value investments. We can invest in minority interest tactic, and also we can do the majority interest, the buyout tactic. But the most important thing is value creation. So we are very confident in our the differentiation is we can add the value whatever to the minority interest company or even the buyout. The majority interest company. And our two main focus is technology and consumer. Technology like from AI to internet to e-commerce, to high-end manufacturing. And consumer, we look into different consumer sector, especially the opportunities they can the market and the demand create in China, South Asia, Japan, and also the Korea. And one more thing I want to highlight is ZWC Partners. We have a very, very good ecosystem of different industrial sectors. The operating partners in Asia, in the regions. We maintain the very long-term and close relationship with different the leaders in different we call the industry sector, from sport, from food, from drinks in consumer sector, even apparel, cosmetic, even in manufacturing. Manufacturing have a different, we call the industry sectors. We know we know the leader in different sectors, and they can help and work together, whatever co-invest or value added, to create the value in our portfolio company, whatever minority interest or majority interest. For minority interest, we support the entrepreneur. Majority interest, we work with the leader and the operator in this specific sector in Asia to help them grow in Asia, and also help them to create the value together. So this is our edge from other Asian private equity firm. So we believe that this is why we create this kind of synergy between Asia and Europe, because of we call our friends of our we call the sector network. So some of them not only is a partners, they also is our LP, because over 35% of our LP is come from the industry leaders, different kind of industry leaders. So this is something we differentiate from other private equity firms.
Great, really interesting. Thank you for that. I wonder if you might please just run us through a few of the trends that you're seeing in 2025 so far. Are there certain sectors, certain geographies that you're favoring based on the market conditions there?
Yeah, I think in Asia, we summarize three interesting dynamics. The first one definitely is technology innovation in AI. Earlier this year, the the DeepSeek, from China, create a huge impact. I think the China ecosystem in AI, I think is supported by a pool of very strong engineer. So we are very confident in the AI chain, and at the same time, we see more and more AI entrepreneur. They do a lot of interesting things from infrastructure level or also from application level. DeepSeek is a very fundamental LLM model, but on top of LLM, we can see a lot of opportunities in China. And another trend is about the consumer sectors. Actually, if we look into the China, because of the past 3 years, the economy, we call the structure change. You can see, there's the two trend. One trend is the consumer, they look after more, we call psychological value consumption. So you see the pop mart, pop mart is very, very interesting model. If you see even some, rising company like, Laopu. Laopu is a retail for gold, but they do it like, like a very artistic, just like, Tiffany, but in gold. But you see they have a very, very good business because of the customer, they value the psychological value provided from the product and provided from the brand. But on another side, you can find that another trend is the market demand for the price value, more price value, consumption patterns. You see, like the retail chain store like Sam, they do very well since last year in China market. So you can see the two trends. One is we call consumption, upgrading by psychological value creation. Another trend is about more we call the price value, mass market consumption. And finally, I think another dynamic is about the capital market. You can find that in the first half of this year, Hong Kong stock market, compete about 100 billion Hong Kong dollar new fundraising among the 42 IPO. This is about 7 times than the year by year. So the market, the momentum in Asia capital market, because Hong Kong is definitely a very important capital market in Asia. But other than Hong Kong market, you see the Asia market is also very, very good momentum. You see the general index in Hong Kong and China stock market is good. Japan is keeping well still. Sure. In the past 2 years, Japan stock market have the good momentum also. I think in general, overall the Asia capital market is show the very good side this year.
Great. Okay. Sounds like there's a lot of exciting drivers for you. You spoke on a panel at the conference, I think it was earlier today, which was titled "From Asia to Europe: Creating Impact." Why do you think that that's particularly relevant given where we are in the market today and to your business particularly as well?
The topic I shared during the Asia panel this morning, I think the key hypothesis is cross-border between Asia and Europe become more and more exciting. Firstly, in consumer side, in Europe, there's many, we call the heritage business with very good brand name. And this kind of brand name, I think they have, currently, have a very stable business in Europe or maybe in US also. But they are not penetrating in Asia market yet. Not only China market, as you know, China market is a 1.4 billion population, also Japan, Korea, and also South Asia. So we are very excited to see the M&A opportunities, in European consumer brand, with differentiation, value creation. So this is what we talk. The topic I shared today is full the M&A, the buyout. We can create the equity value by leveraging the Asia market business. And another hypothesis we can say is the reverse. The reverse hypothesis is because ZWC Pilot is supporting the Asian company, whatever is Chinese company or even Korean company, I just say like we invest in Gentle Monster. Gentle Monster is a typical Korean company, but they are entering, global market, and they are entering Euro market also. The consumer brand, they want to go there, but not only consumer brand, I think they have some like manufacturing, high-end manufacturing companies or even technology company. We are supporting them, to develop the business in Europe market. And the differentiation, I think again is about for example like the technology company is about supported by a large pool of very good very good engineer capability from China. If you see, there's a many successful case on internet. Is a China product manager and engineer. They create very user-friendly product, and globally and global customer like it. And at the same time, higher manufacturing is the same, because China is strong in the manufacturing, and they can not only lower the cost of the manufacturing, they are also have some we call the innovation. If you see the China higher manufacturing, whatever from new energy like battery, solar, and even EV car, you can find that there's many innovation generate and create in China in the past 5 years. So about the manufacturing capability and the innovation in R&D is another very good theme for do the cross-border, we call the partnership. Whatever is some JV, whatever is M&A, whatever is they go direct, and we co-invest with the European investor. So this is another very interesting thing.
And just to, I guess, expand a little bit on that, I know that as you've just touched upon, you've got experience in supporting firms that want to enter the Chinese market or other Asian markets. What do those firms, those businesses need to think about specifically if they're coming into those markets from Europe, say, some of those brands that you mentioned earlier? What are the things that they need to be worried about, concerned about, thinking about when they enter the Chinese market or those other Asian markets?
I think definitely is about the execution. Because firstly, if the brand, I think the brand have its own the brand DNA and the product character. Firstly, I don't think it's all the product category and the product character would be success in China or Asia market, because the Asia market and China market definitely have a very local culture in terms of the consumption behavior. But if there is some opportunity for the European brand have the market in China and also in Asia, I think, as I just mentioned, execution is the key. So I think the right operator partnership is very important. We see some successful case, and we also see a lot of unsuccessful case. I think it's all about the local execution. One risk is sometimes the European headquarters, control too much about the local execution, because actually the local team, he know the market well. They are more localized. They can help to make more local decision. So that's why the good team is very important. The good local team is very important. And secondly, it's about the approval matrix from the headquarters to the local market. I just want to share you one example, like the Emma Sport. We co-invest together with other investor in 2019. Emma Sport is a European group. Under the European group, they have more than 10 beautiful brands like Solomon, French brand, Arc'teryx, Wilson, it was American brand, and I think the success of this this investment is created by very good execution in the operations. You see the China business grow a lot, and from 2019 after we closed the deal, and the operator of this deal. Is a one Chinese firm. I think it's also my very good friends. It's the largest sports apparel brand in China. They do very good execution and to grow the business about 20 times more in the past 5 years. But if you look into Japan, even Korea, you see the Arc'teryx is also doing well, and South Asia is just starting. I think again, the local execution is a key with the right partners.
Okay, great. And final question for you, given that we're here in Paris, and when you gave your introduction, you touched upon your expansion into Europe and the fact that you now have an office here. I wonder if you could just expand a little bit on what your future plans are in Europe, whether that be, from a transaction perspective or expanding the office. I wonder if you could just give us a bit of an insight into your plans for Europe, please.
Yeah, I think this is a very good question. I think the reason why we expand our office outside Asia, especially in Europe, is definitely we see the opportunity. Except here about the cross border, as I just share about the investment hypothesis between the cross border. I think the Europe business for us is firstly is we can look into more opportunities, even locally, right? Because we have the local team, we have the local European team, to search the opportunities. And secondly, again, is about execution. Because in terms of the buyout opportunities, I think the portfolio management and execution is very important. What we can do is we can leverage our, the Asia resources, because ZWC partner is a. I think we are very confident. We have a differentiation in, we call the industry resources. Different industry resources, whatever from sports, whatever from food, whatever from cosmetic, whatever from, different consumer sector, even, in different consumer sector. We talk about the consumer cross-border M&A. So we can invite the best and the right, partners can work together. We can co-invest in this cross-border deal and then help the Asia execution, right? But why we need the local team? Not only because of deal sourcing, it's about, because they are the European brand. We need to respect, the European companies and we build European culture. And so we need the local team that can work well and know the culture of the company and the corporate itself. So so that's why we the European team is helping us more to do the portfolio management for this kind of we call it after deal value creation. Just one example is as you may know, we acquired an Italian brand called Fette. Fette is a 165 years old heritage Italian brand in very high-end luxury, bedding and bath linens. So after we acquired this brand 1.5 years ago, we helped the company to create, a local China team. We have already opened, 2 shops in China this year. And we are also help them, to connect more our resources. For example, the real estate resources, like the high-end luxury shopping mall. For example, we have, the connection with, for example, Plaza 66, Hanlong Group, for example, SKP, wherever, Swire Group. All this is a very strong operator in China and in the regions. They operate, you see the Louis Vuitton, even the Royal Piano is open there, and we can access them very quickly, to get the good location. And at the same time, we have, good connection with, the hotel group. the high-end hotel group in Asia, and they can because the Fatty is also is serving the top 5-star hotel, so we can help them to enter the market by B2B. Also, this is what we do in Asia, and also most importantly is set the right strategy in Asia, in China, in Japan, Korea, and even GCC Middle East market. And I can tell you, the Fatty, when we make this investment, only 5% of revenue is coming from Asia, including Middle East market. If you look into the LVMH, there's more than 30%. So it's a huge potential in China. But why I mentioned this is the European office is also very important because we need the team to work with the company. I mean, we are at the shareholder level, work with the CEO well. So one of a partner in our private equity firm, his background is a former CEO of Royal Piano. So he's a French guy. He can speak very good Italian, and he worked for Royal Piano for 4.5 years. So, Fatty is an Italian brand. So we invite him to become our ZWC partners, in Paris office. So to helping us, to create value and do the portfolio management for Fatty. So this is an example I want to show that, the European, operation. But our future plan in Europe, I think, is we want to look into more opportunity and deploy more money into the Europe. In one sector is consumer, and I mean the brand. So we can leverage the Asian market. Another way is even some potential opportunity for even joint venture and buyout with in Europe in manufacturing, high-end manufacturing sector, because as I mentioned, this is one of a hypothesis we can leverage the China engineering capabilities and also R&D innovation capabilities.
Okay, great. Well, thank you so much. That was really, really interesting, and thank you for coming on. Really appreciate your time.
Yes, thank you.